Ladies and gentlemen, may I have your attention, please? Ladies and gentlemen, may I have your attention, please?
Okay, let's unpack this. The last, 5 days?
Yeah.
A real reminder about volatility.
Definitely.
A really swift, almost calculated technical reset.
Yeah.
But then you see this foundational institutional growth happening underneath, setting the stage long term.
Exactly right. And our mission, really, in this deep dive is to understand that split. Why are institutions quietly building for, 2026?
Yeah.
While the immediate feeling, the retail sentiment, is flashing fear right now.
Right. Where do we even start? The drop itself.
I think we have to, the sheer scale. We
Yeah.
saw estimates are between $1.5 and $1.8 billion liquidated, just in derivative.
Billion. Wow.
Yeah. That tells you it was the leverage traders, the short-term bets getting wiped clean, and not really the long-term holders so much.
Yeah.
As BTC dipped towards 111K, ETH hit maybe $4,200 briefly.
That liquidation number is just massive.
Yeah.
But okay, if you look past the immediate panic,
Yeah.
the biggest news we found seems really rooted in traditional finance.
Morgan Stanley.
Morgan Stanley, yeah. Planning to offer direct crypto trading on E-Trade.
Using zero hash, right, for their institutional liquidity tech.
Exactly. But the real kicker isn't just the trading, it's the timeline they mentioned. First half of 2026.
2 years out, basically.
Yeah, that's a multi-year build. It shows real long-term conviction, totally separate from this week's noise.
And the reason they can plan for 2026 is, well, the regulatory groundwork being laid.
Yeah.
The SEC has simplified rules for spot crypto ETFs. That's paving the way for more listings. You hear tokens like XRP and SOL gaining traction there.
And didn't we just see a Dogecoin ETF launch in the U.S.?
We did, a U.S. Dogecoin ETF. So the environment is clearly slowly adapting to let these institutions in.
And even while prices are dipping, you still see these other moves, like CleanSpark expanding its Bitcoin mining credit line.
Building infrastructure.
And those rumors about CZ, ex-Binance CEO, maybe opening something called YZ Labs.
Right. It shows the underlying ecosystem is still pushing forward, expanding, despite the red candles.
Okay, so that's the institutional side. But it clashes hard with the immediate feeling, right? The sentiment.
Well, absolutely. If you look at the technicals, the short-term picture is, well, pretty fearful. The fear and greed index, it's at 43 out of 100.
23, firmly fear.
Yeah, solidly fear. And that reading, 43, it's significant. It suggests maybe peak short-term pessimism, which is often, the counter signal the big players watch for when the short-term bets are cleared out.
Okay, so let's get specific for you listening. Those key technical levels. After the drop, Bitcoin's kind of hovering, what, $112,000, $113,000?
Around there, yeah.
The absolute key support level everyone's watching is roughly $111,300.
Crucial level.
Holding that line isn't just technical. If it breaks, it kind of confirms that midterm bearish trend lots of traders are betting on.
Yeah.
Resistance that's stacked up between 114K and 118K.
And Ethereum?
Yeah.
Unfortunately, it looks, noticeably weaker than Bitcoin right now.
Yeah, I saw that.
It's trading between $4,000 and $4,200, down, 7 to 9% this past week. And crucially, it broke a pretty significant triangle pattern on the charts. Breaking that suggests momentum itself might be failing, not just leverage washing out. There's a risk of maybe a 15% correction if that $4,000 support doesn't hold.
Any altcoins just following suit, I imagine.
Highly volatile, yeah. They got hit hardest by the leverage flush as usual, so now they're kind of high risk, high reward, but totally dependent on Bitcoin finding its feet, finding stability soon.
So the big takeaway then, is this whole thing just a market shakeout? Or is it more like a sophisticated transfer, high conviction assets moving from maybe nervous retail to long-term institutions?
That's the fascinating question, isn't it? And maybe here's a final thought for you to chew on.
Okay.
If the SEC is actively easing ETF rules for tokens like XRP and SOL, and huge players like Morgan Stanley are planning years ahead, targeting 2026, what does this current fear rating of 43 really suggest? Think about the divergence between that short-term turbulence and that kind of ironclad long-term institutional strategy. You have to ask, who exactly is this fear meant for?